we've got Suresh Mehta's portfolio on hand with us. Let's take a look.
"75-year-old Suresh Mehta is not your average equity investor. This part-time real estate consultant manages the portfolios of his two sons and daughter along with his own investments. He's been dabbling in stocks for over 15 years and considers himself lucky even in these turbulent times. So what is the secret behind Mr. Mehta's stock-picking strategy?
I go on reputation, name, and of course performance, but not exact figures.
That approach has helped Mr. Mehta ensure his portfolio delivers desired results. Apart from only investing in reputed stocks, Mr. Mehta strictly follows the path of capital preservation, and that is his winning edge. Mr. Mehta owns blue-chip stocks from across all sectors bought at throwaway prices. His top picks include the likes of Reliance Industries, Tata Motors and Coal India. It's a portfolio that many would envy. But sometimes even the best investors need a helping hand.
I like ICICI Bank, Axis Bank and NHPC, Reliance Industry.
Everyone.
I am so fond of the script, and I have bought at a high price different values. And last is Britannia, because it's a very good script.
So what should Mr. Mehta do? Should he tweak his portfolio at all? Should he add new stocks to his portfolio at current levels and perhaps buy some more of the stocks he already owns?
Okay, so you heard Mr. Suresh Mehta's mantra to success, and he has been dabbling in the stock market for 15 long years. Blue chip stocks is what he owns. He's got a great profile and a great portfolio at that. Let's get to the individual recommendations he's got for you. So the first three counters we discussed: an Axis Bank that you picked up at 300, a Britannia as well as Castrol. What does he do with those three?
I think Axis, he's acquired it at quite a low level, so I would recommend, given the growth prospects for the bank, it's reached a maturity of sorts. So he may not get this upside beyond this 1,000, 1,100 level as significantly as he would if he were to switch into, let's say, a new age bank which is transforming itself. So I would recommend switching into an ING Vysya. It's on a turnaround, absolute turnaround kind of a trajectory, and it could do wonders for him in the times to come. No, and as compared to Axis, it would definitely do much better. Castrol, of course, it's a stock that you can't get very easily, but at higher levels it may probably make sense to start booking out some profits, as capital preservation is the key. You can't keep on putting the portfolio at risk by holding on to stocks forever. So Castrol is another stock that I would recommend he books profits out of at the target levels. The third one you'd mentioned was Britannia. Britannia is again an FMCG company that's doing extremely well, but at somewhere around 600 plus, that's another stock that would fetch him almost more than 100% returns, and I would recommend some booking profits. So there are targets, but right now these would be, some of them would be hold on, and then later on book profits at these targeted levels.
Prakash, the next three stocks are certainly the envy of a lot of investors: Coal India, Colgate and L&T.
That's true. These are absolutely abuzz all the while in the news. But if you go one by one, an L&T at the average acquisition price of 1,000 probably gives him another 20% kind of 25% kind of an upside at in the current prevailing market conditions. But given the fact that cap goods companies are under a lot of stress, he could probably re-enter at 1,000 levels if he has to book profits at current levels. So the strategy would be to exit at the current market price, wait for it to correct closer to 1,000 levels and re-enter. When it comes to Coal India, again, it's a stock that's been the darling of investors, but it's been surrounded with a lot of controversy. But I would believe at 375, it could again give him some value. It could probably be roughly about 15% of an upside from where he's acquired, and that could be a stable level to get some profits home. And the third one, of course, is Colgate. That's a stock that you don't find very easily, and it's good to be staying put in this. But at 1350 levels is another values from a valuation perspective where Colgate could start looking slightly stretched, which is still another 100, 200 rupees, 150, 200 rupees away from here. But 1350 is what I would recommend he pegs as a target. But till that, he holds on to it.
Right, and Prakash, what do you make of his investment in Reliance Industries? That's the only one where he's losing out, and a Tata Motors as well as Tata Steel?
Yeah, I mean, if you look at Reliance Industries, given the kind of sheer quantity that he's acquired, he's probably started acquiring it at very high levels, and he's probably averaged out at almost more than double of what the stock currently is available at. So I would recommend that if he likes the stock, and there's nothing wrong with the company on a longer term basis, he could start averaging at closer to 700 rupees. The stock has reached even below 700 in recent times, and those are times when you could go out and accumulate, which would eventually bring his average prices down, and in the long run, in the next 2 or 3 years, he could see a significant amount of upside of profit from that counter. Tata Motors, I don't think he's acquired at a very high rate, but then given the kind of momentum that Tata Motors is in on a longer term basis, he could probably start looking at exiting at 300 plus kind of levels. 310 probably is a good reference point at the target level, but he'll definitely make money at that level. Tata Steel is the only stock which I would not recommend he holds on. He could probably immediately switch out of it, get into a non-ferrous counter like Hindalco or Sterlite. Sterlite to me is a very attractive stock, would give you a strong upside of another 35% in the next 12 months from here. So look at Sterlite, switching into Sterlite with a 145 kind of a target.
And Prakash, what would be your advice on ONGC and NHPC? Do you think it'll be a hold?
Not really. NHPC is the one which I am slightly, I have a contrarian view. I believe the stock is, from his acquisition price, it's come down quite significantly. Now, if we were to wait for it to move back to his level of buying in, it could take much longer. So, I would recommend if you were to look at getting into a similar government-backed, government-owned, strong leadership position, you could look at Engineers India Limited to switch into. Of course, they're not comparable at the same, in the same industry, but Engineers India Limited is something that could give a very strong upside from here on, and it also offers all the salience that an NHPC could probably cover. So maybe with the target of 285, Engineers India is a better switch from NHPC at current levels.